market relatively flat. The shilling feeling a little bit of dollar pressure, but still looking a lot firmer than we've seen it in recent sessions and weeks.
Yes. Well, I would say generally, if we were to look at it, it's been some positive response, not just from the shilling, but also some of the financial counters in the stock market, and also in terms of the reports that each one have given in the third quarter profit announcements for the various banks. You notice the Equity Bank, the KCB, but generally I look at it from the point of view that it's almost like the way you'd be on a long distance journey. You move from a smooth stretch and now the road has been winding for a couple of times. But generally, it goes to show that the economy is not really doing that badly as most would perceive it to be. Okay,
so the shilling has responded to the agreement by Eurozone leaders on additional funding for a bailout package to stabilize the euro. But there are other variables that have impacted the shilling. It's not just exogenous forces from Europe. It's inflation, which is now over 18%, 18.9 was the figure we saw for October. It's things like exchange controls. It's subdued growth. It's all these other variables, and those things haven't gone away, Waiyaki.
Well, they haven't gone away, but they've always been part of it because it's something that we've noticed over a period of time. But on the positive side, you notice that the rains have come over, the short rains have come over. Construction is still continuing. There's a new cement manufacturing company that will be up and running. So it means that generally demand for most of these infrastructure projects will continue to put pressure, yes, to bring growth because it also creates jobs. Despite there being high inflation rates, there's still money in circulation to be able to absorb most of the goods that are in the market. Yes, the only thing that would happen is that most people tend to reduce in terms of their spending. Certain items, more or less luxury items, tend to be cut out, but the basic items will still be consumed because at the end of the day, they still remain in the key essence of being basic.
All right, Equity Bank's results, let's talk about them. They are often a darling of the market, a blue chip counter, stellar growth for quarter three. And they've done it despite the challenging environment, rising interest rates, rising costs of borrowing, squeeze on their margins. Can they sustain this performance?
Well, I would say that question has been asked out and out maybe now for the last 2 or 3 years, and each year they've proven themselves capable of actually giving positive returns. What we need to look at with equity, the same example I would give with Safaricom is that whatever structures they have in place, they're able to adapt to the ever-changing market environment. They're innovative as opposed to reactive to the market. They always tend to have 1 or 2 aspects about it, and they're not shy to make drastic management changes or drastic changes with regards to their business, short of moving away from their core business. And this, in the long run, has tended to be a positive rather as a negative aspect to the growing of the business. And yes, if we look at the remaining quarter, they would still be able to give, albeit positive returns, because their structure has proven time and time again to be effective.
I mean, I think the question I'm asking really is also a question that applies to other blue chip banks like the KCBs. Generally, valuations are low in Kenya. So basically, the share price is trading much lower than what we've seen it at the same time last year. But experts are saying, all things being equal, with the shilling stabilizing and market conditions just coming into line, we could see a 35% yield on the premium of the share going forward. Is 34% not entirely over-optimistic?
Well, it is slightly entirely over-optimistic having regards to the performance also at the stock market. But when we look at it at the end of it all, one of the key things that would push it up also has to do with the influx of foreign investors who have a demand on certain blue chip stocks, and also the return on the company's viability in terms of profitability in the long run and its ability to grow. So those put into perspective would also give that ability to give that return on investment at the long run.
Market movers today were Barclays Bank up 7.6%, KCB, like I said, up 7.4%. They had good results. NBK 6.7%, Kukuzi up 7%, Ria Vipinga up 6.5%. So it's the story of the banks, and it's a story of the agro producers buffered by the currency. What's lifting all the other financial institutions, because they all, occupy a different kind of space in the consciousness of Kenyans?
Well, I would say what has happened is that they're riding also, the other financial companies are benefiting from the success of one, because at the end of the day, it could be that you want to diversify your portfolio. If you've already exposed yourself, for instance, in Equity Bank, you realize, let me expose myself slightly in Barclays Bank and the same in the other financials, because out and out, time and time again, they've proven to be the one key sectors within the stock market that are actually giving a slightly positive return on their own investment, but also in terms of their valuations. When you look at some of the stock prices, for instance, Barclays Bank has slightly been more attractive for also domestic investors who are looking at having a stake in it. So going forward, that would be one of the key analysis that I would give, that it's also the sentiments in the market that you want to expose yourself within these key institutions.